Hello and welcome to Economics and Information by Zahida Jabin.
Today I'm going to teach you what is government budget. This is one of the topic and one of the unit of macroeconomics of grade 12. In this session, I'll be explaining you the definition of government budget, the elements of government budget, objectives of government budget, and structure of government budget, the basic structure of government budget. This will help you to understand the concept, what is government. So let's move to the topic. First of all, I'll give you the definition of government budget. Government budget is an annual financial statement showing item-wise estimates of expected revenue and anticipated expenditure during a fiscal year. I will break this definition into parts so that you can understand in a better way. I repeat, government budget is an annual financial statement. In a year, one time it comes. So it is annual financial statement which shows item-wise estimates of expected revenue, means about each item estimates, not actual, estimates of expected revenue. Expected means which the government is going to get. Expected revenue means the income, and anticipated expenditure, and where the government is going to spend, means both are expected. Anticipated means not actual, because government budget is proposed before the ensuing year. Before the year start, the government budget is proposed and it has to be passed in the parliament and then it is implemented. So let us move to the topic. The definition of government budget, as I told you just now, government budget is an annual financial statement showing item-wise estimates of expected revenue and expected expenditure in a financial year or a fiscal year. Now you should know what is the meaning of financial year or fiscal year. Fiscal year or financial year starts from 1st of April and ends on 31st of March. It is different from calendar year. Calendar year starts from January and ends in December. It is not actual income and expenditure of the government, but it is the estimated income and expenditure of the government in a fiscal year or in a financial year. It is estimated before the beginning of the financial year, and then the estimate of expenditure and revenue is presented in the Lok Sabha, in the parliament, by the finance minister, and then a discussion is done and it has to be passed there. The government plans expenditure according to the objective of the government, and government explain from which source, how much amount the government is going to get. The planned expenditure and planned income is mentioned in the annual budget. Government gets revenue from different sources, like income of the government comes from taxes, fines, fees, interest, interest on what loan which the government has given, the dividend from the public sector undertaking, and profit of public sector undertaking. Government spends on where the government is spending. These are the sources of income: fees, fine, interest on loan. And where is the government spending? The government is spending on maintenance of law and order, administration, salary of government employee, pension, defense, subsidies, on police, on many other goods and services, on construction of roads, railway, dams, bridges. Government is spending. So these are the area where the government spends. Now, as I told you, the finance minister presents the budget every year in the Lok Sabha on the last working day of February. This budget is proposed before the beginning of the financial year. As you know, financial year starts from 1st of April to 31st of March. What is budget showing? The budget is showing the performance of the government in the previous year, how the government has performed, and what are the plans and programs in the next year, coming year, and after that year, the next one more year. That three things are there. Elements of government budget. What are the elements of government budget? It is a statement which includes the estimated income and expenditure of the government, estimated income and expenditure of the government. The budget is made for 1 year. Expenditure are planned according to the income which the government is getting. Expenditure are planned according to the revenue or income of the government, and budget requires approval in the parliament or in the assembly by the competent authority before it is put for implementation. Now let us move to the objectives of government budget. What are the objectives of government budget? The objectives of government budget are, the very first objective is reallocation of resources. When we say reallocation of resources, means, as you all know, that resources are limited and resources have alternative use. We have limited resources and our wants are unlimited. So we have to use the resources in a judicious way, most economical way, so that best possible thing can be, best use of resources can be done. Rapid and balanced economic growth with equality and social justice is one of the objective of all our policies and programs. All policies, plans and program has common objective, that is economic growth with equality, social justice, and the growth should be rapid and balanced. Balanced because it should not be limited to one section of the society or one area of the country or only to the metropolitan city. It should be balanced. The growth should be in all part of the country. Private sector, if it is allowed everything on the private sector allocates the resources or uses the resources with the objective to earn profit. Private sector may produce a good which is harmful for the society, and because their objective is to earn profit, so they may produce harmful objects like alcohol, cigarette, tobacco for the profit. But when government is allocating the resources, the objective of government is profit maximization with social welfare. Profit should be there, but social welfare must be there. So government will not allocate the resources on the goods which are injurious to health, like cigarette, tobacco, alcohol, will discourage production, or will charge or will impose heavy taxes to make it dearer, costlier, so that less people should be using it, or if they're using also, the government should get income from it. Goods which are socially beneficial, useful, the government should allocate resources on such production of such goods. Second objective of government budget is reduction in inequality of income and wealth. To bridge the gap between rich and poor is one of the important objectives of the government budget. The difference between rich and poor, inequality in the distribution of income and wealth can be reduced by taxation policy or government expenditure policy. Government should charge high taxes from rich people or those people who have high income, or those people, those goods which are consumed by rich people, to withdraw money from them. And government should provide subsidies, tax rebate and other amenities to the poorer section of the society, or to those who have less income, should give various type of rebates and free amenities so that the gap between rich and poor should be reduced. Another important objective, the third one, is redistribution of income. The income which is collected from tax, which was imposed on rich people, should be utilized for the benefit of the poor section of the society. It should be used for providing them food, clothes, housing, education, health facility, and these should be given free of cost to the unprivileged section of the society. Government should take special measure to provide all these things to the poorer section of the society, the LPG, gas, clothes, and these people who are not getting the basic requirement should at least get the basic requirement. So the income which is government is collected in the form of tax should be used for the benefit of the poor, not for unnecessary expenditure of the government or government official. Increase in economic growth. The GDP should increase. GDP means gross domestic product, and it should be sustainable increase. And GDP will increase only when production of goods and services increase. So the government has one important objective to increase the production of goods and services, so that more goods and services are produced means more goods will be consumed by the people and the standard of living will increase. Next objective of the government budget is to reduce unemployment and poverty, or eradicate unemployment and poverty. Unemployment and poverty is one of the challenging feature of the country. Government has to take step. Government should allocate resources in such a way that it should generate employment opportunity, which will help to reduce unemployment as well as poverty. So government should use its resources for construction of dams, roads, or electrification and railway construction and bridges and many other things, so that it can generate income for the people, it can provide employment to the people. And government should also promote small industries and cottage industries. These all will reduce poverty and will generate employment. Another important objective of the government is to control price. Flexibility in price or fluctuation in price is not good for any economy. So one of the objective of the government budget should be there to control the price. During recession, government should increase its own expenditure. Recession is a situation when income of the people, general people, have less income and everything, people are losing their job. At that time, government should increase its own expenditure and provide employment opportunity and increase the purchasing power, reduce the tax so that more money should be retained by the people. Means people should have more money, less taxation policy. That will help to increase the demand and the economy can come out of recession. But if it is inflation, then government should impose more tax and cut down its own expenditure also. Another important objective of government budget is management of public enterprises. Public enterprises are government owned and managed enterprises. There are government organizations like railways under the control of government, power generation, electricity generation, or production of iron and steel. These are under the control of government. That should be managed properly so that it should generate profit and employment to the society, to the economy. So these are the objectives of government budget. Let us have a quick look, just a look of structure of government budget. The detail of government budget I'll teach you separately. I'll give you the detail of it. What are the sources of income? If you see the structure of government budget, it has two parts. One is budget receipt, one is budget expenditure. Budget receipt is the income of the government, expected income of the government, and budget expenditure is the estimated expenditure of the government. Receipt is income. Income from which source? Revenue receipt. Two part, it has two component, two part, revenue receipt and capital receipt. Now what is revenue receipt? Revenue receipt is the income of the government which neither creates liability nor reduces asset. Means government gets income, but it is not creating any liability on the government to return that income to the people, nor it is reducing the asset of the people. Like tax government is getting, but it is not creating any liability on the government to return that money back. Or fees and fine. Government is getting income, but no liability to return that money, and it is not reducing the income of the people. Or profit and dividend, government is getting profit and dividend from public sector. Government is getting income, but no liability is created to give money to someone, or it is not neither reducing the asset of the government. Now we will come to capital receipt. Capital receipt is the income of the government which either creates liability or reduces asset. Both will not happen. Either it will create liability, means either it will create the responsibility to return, or it will reduce the asset. For example, borrowing. When government borrows money, government gets income, but it creates liability to return in future. Disinvestment means selling the asset of government shares or the asset of the government. When the government is selling, it is reducing the asset. So it is capital receipt. Here the government gets income, but either it is creating liability or it is reducing asset. This is about the income. Budget receipt. When we talk about budget expenditure also is of two types. One is called revenue expenditure and one is called capital expenditure. Revenue expenditure is the expenditure of the government which neither creates asset nor reduces liability. Note it down, one common thing. Revenue, whenever you are talking about revenue receipt or revenue expenditure, the definition starts with neither creates. But for revenue receipt, we are saying neither creates liability nor reduces. We are talking about liability first. Here we are talking about asset first. It is the expenditure. Government is spending income, but no asset is created. Neither creates asset. No asset is created, nor reduces liability. Government spends money, but it is not creating any asset or nor reducing any liability. Like when government is giving the salary to the government employee, or spending on defense, it is not creating any asset or reducing any liability. Routine functioning or expenditure on routine functioning will be included here. The amount which is spent on the routine functioning of the government, it neither creates asset nor reduces liability. Keep it in your mind. Expenditure on police, on subsidy, on grants, all these given to the public or to the government official, neither creates asset nor reduces liability. Next is capital expenditure. Capital expenditure is the expenditure done by the government, but either it creates asset or it reduces liability. Either creates asset means it will either create asset or will reduce the liability. For example, when we are saying construction of road, bridges, dams, government is spending money, but asset is created. Purchase of machine, asset is created. So returning of loan return reduces liability. Expenditure is done, but it reduces the liability. So capital expenditure either creates asset or reduces liability. When we are talking about expenditure, note it, we are talking about asset first and then liability. Whereas when we are talking about receipt, we are talking about liability first and then asset. This is one of the clues to remember the definition well. Thank you very much for this session, and we'll have another detailed session of structure of government budget, each and everything in the next episode. In the next, thank you. Please give your valuable suggestion and subscribe the channel if you like, or if you have any doubt, or if you want. After this, once the lesson is taught, I'll give you the objective question and probable question for the board examination. Thank you very much.